Assalamualaikum. Hey everyone, we are back. Time for another industry review. And now we're going to be focused on, again, like I like starting from the Zach's sector rank, picking specific industries that I can take a look at. Industries that have done pretty well in the past few weeks, and hopefully the kind of theory is that okay, this is going to be a continuation of a trend, so it's going to maintain momentum, and so maybe we can find some good deals in these industries. And so we already covered mobile homes in the last video that I did, mobile homes and RVs. Now I'm going to be looking at wood specifically, so building products and wood. All right, cool. So again, like it looks like it's been outperforming the S&P 500 at least since the start of the year. And 17% total return, pretty good. This is definitely one of those recovery plays, home builders in general. Yeah, I mean, that's kind of like the telltale sign of a recovery, right? You're looking at people building homes, includes lumber and wood products, manufacturers like Potlatch Corporation. 9 out of 11 companies beat their earnings. Okay. All right, cool. Looks like we have quite a few companies here. So we got our work cut out for us here. And so we'll start taking a look at each of these individually. But again, one of the things I like doing kind of early on is pulling up Ibis World, and taking a look at a high-level overview of the industry and how that part kind of works. Wood flooring manufacturing, wood framing, wood product manufacturing in the U.S., wood paneling. Let's search home and wood. Let's see if we can find. Nothing. Wood flooring manufacturing. Come on then. Let's see. Wood paneling, wood pulp mills, woodworking machinery. There's got to be a way to filter this. Okay, we're interested in the US. Content type. Wood framing, wood product manufacturing. I'm guessing that's probably it. Lumber and building materials stores, home improvement stores, home builders in the US. Okay, yeah. Yeah, I think this is it. Related industries, wood paneling, millwork, wood pallets, prefabricated home, sawmills and wood production. Let's take a look at that too. I think it might be one of these two. Complementer. Okay. Oh, you know what? It doesn't look like this is it. Yeah, this doesn't look like it is what we're after. God, why is the internet so slow? Maybe it's the problem with this website. There's too much going on. Yeah, it looks like the website's got a hitch. All right, anyway, so kiln dried lumber, furnace or oven for burning, baking, or drying. Okay. Housing starts. Okay, yeah, I've heard of that term before. Housing starts. Hmm. Wood paneling manufacturing in the US, updated March 2021. Okay. Yeah, I think this is the one. Or maybe it's this one, right? Yeah, this is the one. Wood paneling is what I was looking at, but I think it's primary activities: sawing, preserving lumber, and then hardwood lumber, wood chips, wood product preservation. Okay. Yeah. I think this is it. Also logging in the US. Yeah, probably. Also millwork. Man, there's so many industries all kind of related to this specific vertical. Price of sawmill lumber, prime rate, value of residential construction. I think this is a lot more aligned with what we're looking at. This is home improvement. That one is specifically about residential construction, which I think is what we're after here. We're interested in the what is it? Lumber and wood product manufacturers like Potlatch. And the other thing we can do is also just look up PCH and see what industry they're in. So I can actually see that down here. Real estate, Reit, specialty. They own 1.8 million acres of timberlands in Alabama, Arkansas. Really? It's a Reit. Didn't see that coming. So they just own the timberlands, the kind of forests. Okay. Like potlatch, huh? Interesting. Then you have BCC. I wonder if that's on there. Yeah, it doesn't look like it triggered. Sometimes it does, sometimes it doesn't. It's still a bit glitchy. I just made this update that pulls in peers from Seeking Alpha and then automatically loads new tabs for these peers. And this is lumber and wood production under basic materials. Lumber and wood production. Lumber and wood production. Sawmills and wood production. Yeah, that's the one. This is exactly the one. Sawmills and wood production. That's the one we've got opened. Logging in the US. No. All right, so we're just going to focus on this one. Sawmills and wood production in the US. Okay, so overview, it's impacted by price of sawmill lumber. Okay. All right. Prime rate, the trade weighted index. The prime rate impacts, it's basically short-term interest rate, right? Impacted by the 10-year as well. Value of residential construction and housing starts. Makes sense. Okay. So it's really tied closely to the housing industry. Kind of makes sense. Like if you're building a house, you're going to need some wood, right? First tier suppliers, timber services in the US, logging in the US, industrial machinery and equipment, wholesaling in the US. Okay, so this is the equipment that would allow you to chop up the wood. And then there's construction and mining equipment, wholesaling. Construction and mining equipment? Yeah, I'm not entirely sure why that would be. That would be a thing, but okay. Huh. I think I have the prime rate specifically. All right, and what else? Here's this thing called Text Sniper for collecting text from images. Super helpful, by the way. Why is it bringing an image? Yep. Sawmill lumber, residential construction. Okay. Okay, this is really helpful. So it's kind of like a bet on the resurgence of housing, residential construction. Also gives you exposure to the price of sawmill lumber. So if I assume if the price goes down, well, you're going to be keeping a lot of this sawmill lumber in inventory. So if you buy it when the price is low and then you sell it when the price is higher, I imagine that's going to impact your margin, like that differential. But this is just an assumption. So first tier suppliers are timber services, logging, industrial machinery, equipment. Okay. The buyers are going to be cardboard box and container manufacturing, wood paneling, lumber, paper mills. Paper mills. Okay. Paper mills. Okay. All right. This is interesting. Buyers. So that would be consumers, obviously. Consumers building homes. Well, I think that would be ridiculously small. Like it's mainly going to be these cardboard box and container manufacturing in the US, paneling manufacturing in the US, lumber wholesaling, paper mills, wood pallets and skids, wood product manufacturing, paperboard mills, millwork, wood pulp mills. Okay, cool. Good to know. And I think it's pretty obvious, like what the industry is about. Like you basically get logs and you cut them up, you chop them up, right? I assume that's it. Sawing hardwood logs, sawing softwood logs, preserving lumber with chemicals and resins. Major products are hardwood, softwood, and wood chips. What is lumber? Let's see. Okay, all right. Yeah. Lumber. So it's just this. Makes total sense. Gypsum board, hardwood, particle board. Okay. All right. So it's not exactly, super complex. It's pretty straightforward. It's clear what they do. 31 billion revenue. Annual growth rate was negative the past 5 years, and next 5 years is predicted to be positive 3.8%, which is, I guess, significant. Profit is 500 mil. I assume this is annual, right? 1.7% profit margin. So this is your net income margin. This kind of gives you an idea for what net income margin is going to look like across all these businesses that you're analyzing. So that's this line over here. Where is it? Net income margin right here. So you can expect it based on like industry-wide metrics to be around the 1.7% mark. And yeah, that falls roughly in line. 2,590 businesses, so very fragmented. I don't know how, like, what the distribution, like, how concentrated the revenue is. Oh, okay, very tiny. Like, the biggest players only have like 6% each. That's good. Well, actually, I don't know if it's good. So maybe it's increased competition. Maybe they're just geographically distributed because these are really heavy, so it matters, right? Let's see. Concentration is low, technology change is low. Okay. Life cycle mature, revenue volatility is medium. Okay. Low barriers to entry, right? Again, because apparently low capital, high competition, low customer class concentration, low product service concentration. It's essentially a commodity, right? It's essentially a commodity. Okay. Opportunities, high revenue growth, high performance drivers, trade weighted index. Threats, low revenue growth. Value of residential construction. So if that drops, Products and services, softwood lumber appears to be. I wonder what the applications are. Probably see that under products and markets. Rising interest rates. Oh, so it's also a bet on against interest rates. Like if interest rates drop, you can expect this segment to grow faster. Which kind of like it makes you wonder because interest rates dropped. I remember seeing earlier about 1% over the course of 5 years between 2015 2020. And yet, based on what we're seeing here, you have very little annual growth between 2015 and 2020. Why is that? The industry's main activities include sawing hardwood and softwood logs and applying chemicals to them to prevent mold. Oh, I didn't think there was a chemical angle here too. In 2020 alone, industry revenue is anticipated to decrease 12.5%. Okay. All right. It's a lot of information. Prime rate refers to the interest rate charged by banks to their largest customers. Good indication of interest rates for consumers. An increasing prime rate restricts flow of money and disrupts spending plans. Right. Okay. Prime rate. Yeah, I remember. So yeah, I have an article on this. Oh, that's just referencing this blocks up and this block up here. Okay, Federal Reserve. The prime rate moves with the Fed funds rate. So prime rate, the rate that a commercial bank offers its least risky customers. And you can see that the prime rate here, that's in black, follows the Fed funds rate. So it's the Fed funds rate plus some fixed amount. And it looks like that's about 3%. So Fed funds rate plus 3%. Fed funds rate is set by the Federal Reserve. Okay. All right, cool. It's useful to know, useful information to have. All right, I know what lumber is now. Learn something new every day. Where was I? All right, so prime rate impacts sawmills and wood production negatively. So if the interest rate drops, but again, this just indicates that the business is cyclical, right? No kidding. Everybody knows that, right? And people are going to be buying wood when things are going great, when business is booming, when interest rates are on the way up. Or at least they've been historically low. When you have that turnaround, that inflection in interest rates, I think that's when you expect consumption to increase. Housing starts. Okay. Average 2,400 square foot single family home requires more than 16,000 feet of lumber just for framing. Demand for lumber is strongly connected to activity in the housing market. So the primary market seems to be in framing. I like it. Value of residential construction expected to decrease in 2020. Price. When price of sawmill lumber rises, industry operators earn more revenue from selling their products. If the price of sawmill lumber rises too rapidly, can sometimes steer consumer spending towards substitute products. Volatility in the price of sawmill lumber. Yeah, it'd be nice to actually see price of sawmill lumber. What is this price of sawmill lumber? Let's see if we can look it up. Maybe there's an ETF or something. Okay. Okay, I don't want to look at prices by frames, my friend. Oh, gotta be kidding me. Alhamdulillah. Okay, maybe I should just mention chart. All right. Oh, come on. Come on, white charts. Come on. Let's just check Google. Sometimes DuckDuckGo, doesn't work as well. Skyrocketing lumber. Wow. Okay. All right, so let's take a look at 1 year lumber. Whoa, okay. 5 years. Wow. That's pretty crazy, huh? Price of lumber is up like crazy. Which, like, I don't know if that's a good thing. I mean, that's what it says here, right? Price of lumber, where was that? Yeah, here it is. So the price of lumber is tied to consumer demand for building and remodeling homes. So higher price, higher demand, right? When the price of sawmill lumber rises, operators earn more revenue from selling their products, which is great for everybody in the wood industry, right? But if it rises too rapidly, it can sometimes steer consumer spending towards substitute products. Okay. So 6 months. Can you get off? Like, what is this thing? All right, 972. Home building and supply shortfalls are driving wood higher. All right, nice. This has been a great. I can imagine like all of the charts in the wood space just looking up and to the right. Sure wish I was in this industry before, huh? If the price of the commodity itself is going up, pretty much the entire industry is going to see improved performance. That's what it looks like. So industry performance 2012 to 2025. This is just projected crap. Okay, cool. So I just want to get, sorry, I guess I just want to know products breakdown. Okay. Softwood lumber, hardwood lumber. Okay. So I'll just capture that here. Products. Let's just get this. Okay. And industry revenue as a whole is 31 billion. So that's kind of like a key metric to have handy. So industry revenue is roughly 31 billion. Okay, that's good to know. So when we look at individual companies and we can see what revenue they get, we know how it compares to the industry as a whole. Assuming they're in, one specific industry and not in a bunch of industries, but yeah, okay. wood chips, particle board, furniture, mulch, and paper, hardwood and lumber. Okay. Softwood lumber. So this is the most popular product. Wood from gymnosperms, which generally mean conifers in lumber production. Common softwood varieties. Okay. Construction, furniture, and paper manufacturing. Okay. Cool. Looks good. Wood product preservation, applying chemicals to prevent decay and protect against fires. Hardwood, more durable than softwood. Okay. More expensive because it's more scarce. Okay, cool. I think we have enough background to head into these industries and start looking at some of the major players here. So we're gonna start again, like looking at where's our friend Zach's? Here we are. So you have BCC, CTT, FND, GELD, DOOR, PCH, a lot of companies. There's 11 of them in total here. And I bet we're going to be seeing a bunch more as we look at some of the peers along the way. So I'm excited to dive in. Let's do this. So starting off with BCC, Boise Cascade Company. Wood products, distributing building material in the US and Canada. Okay. Wood products and building materials. We already know, building materials, you're gonna look at some softwood action. That's what you're looking for the framing for buildings, right? So we already know that just by looking at some of that background research, right? So I-joists for residential, blah 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 blah. New residential construction, repair and remodeling, light commercial construction, industrial applications. Okay. Just make sure we're still. Oh, come on. Come on. Why does it keep doing this? You know, it looks like I'm gonna have to re-upload this. I do not know why this is happening. I mean, this is not the first time this happened. It's really annoying. It's really annoying. But you know what? I've got it recording, and I'm gonna make sure that we get this uploaded. Crap recording. Crap streaming. I can't get this working. Can't even speak English at this point. All right, cool. So blah 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 blah. Okay. All right, cool. We're ready to dive in. So revenues looking good. Looking good. I really like this. There's strong growth. You had a dip in 2019, but again, maybe some COVID impact there going on. I don't know. I don't know what happened in 2019. Like if you look at 5 years, 2019. Yeah, it's down here. Huge drop in the price though, huh? Yeah. Probably reflects lower demand. All right, so debt, we got some debt, but very small relative to revenues. I like that. I don't like seeing a lot of debt. Debt to equity is 1.3. That's nice. A bit on the high side, but you know what? It's okay. It's okay. It's not bad. In absolute terms, it's not huge. I don't like the trend because it looks like it's been going up consistently. So I don't like that. But as long as it doesn't outpace revenue, I guess it's okay. Quick ratio. So again, probably a good idea to set this up, right? Set up a page with. Oh, would you look at that? I've already reviewed BCC. And I did this once before. I don't even remember when that was. But wait, I can actually see that here. Yes, March 4th. March 4th. Oh, that was 10 days ago. Yeah, I remember looking at BCC because I was interested. I don't think I actually bought. No, I didn't buy because, man, it was expensive at the time, right? It's expensive. I was trying to buy it at 46.5. That's 10 days ago. Okay, we'll get to that in a sec. But yeah, I don't even want to know how much it's at right now. All right, so I'll cover the update. Credit assessment looks solid. Okay, yeah, it does look solid. Cash ratio is significant. Interest coverage is strong. Cash interest, nothing to worry about there. So in terms of assets, let's see what they got. 50/48 is tangible. 21 in book. Cash is 10. That's strong. Dividends, $2. Wow, that's nice. Let's see. I mean, relative to share price, right? I haven't seen the share price yet, so let's not get too excited. Gross margin. But wait, it's $46. I remember I was trying to buy it at 46, so it can't be too far off. Gross margin 17. EBITDA margin is 8%. Okay. Operating's at 6, net income at 3. Okay. All right, I mean 2% would be okay. Like historically, the average probably looks somewhere around 2%. 2% net income margin. Which, yeah, sounds like rubbish, right? But again, when you compare it to industry performance, it's probably not that far off. Again, where is that? PE, net margin. Net margin on the industry is 4.3. That can't be right. Yeah. Okay, there's a discrepancy between what you're saying and what's showing up over here. No, I think it was industry at a glance. Profit margin here is 1.7%. So what are you talking about? What are you talking about? Net margin. Net margin is 4.3%. Weird. Anyway. So, yeah, I couldn't get the industry peers. It looks like it couldn't find it. Anyway, so performance looks decent. Net margin's a bit low. Net margin's a bit low. None recently. Net margin low, just 2%. Around about 2%. EPS is strong. Operating cash flow has been positive for a while. This is nice. I like this business. Even asset turnover seems decent. I like this business. So it's really just a question of price. Like return on invested capital, pretty okay. Like pretty okay. You know, past few years, it's been decent. It's been decent. Not great, decent. Past year, they killed it. Okay, so price. I said I wanted to get in at 46.5. I think when I was looking at it, whoa, 59. Wow. I was just looking at it 10 days ago. BCC. This is going to hurt. This is going to hurt. I just saw this 10 days ago. Oh, dear me. I saw it here. I was like, oh, you know what? Let me just wait a little bit. Oh, my God. That was such a wrong call. But again, like I think this is just it's based on this idea that prices are all over the place, right? They go up and down. Short term, it's very difficult to predict. But I think I was trying to get to. Yeah, I don't know why I didn't buy it. This would have been a great entry point. Looks like it was consolidating for a while. I don't know. I don't know. I don't know. Should have bought it. Should have bought it. Maybe I'm just being a stickler here. Maybe I need to reduce my my standards a little bit. Get in on some of these positions, even if it's just opening up a position, right? But man, wow. Went from 47 to 59 in 3 months. Wow. EV over beta is at 6 now. 13 times the earnings. See, now it's too expensive. Now I can't get in. Like maybe there's still an opportunity. Maybe if I'd already bought, I'd consider it. But where is it? BCC. There it is. 46. I had it. I was trying to get it at 46. I was trying to get it at 46. Oh, yeah, that was too greedy. March 4th. Yeah, I was trying to get in at 46. It was at 49. Too greedy. Yeah, I should have bought it. I should have bought it. Okay, you know what? I'm going to update this. So at 40, say 47.4, 0.5, 47.5. There we go. I'm going to add a last review too. That's today, 14th March. Actually, we don't. I already tracked that in Rome, so I need to copy the same information everywhere. All right, so yeah, that kind of gives you an idea for how that worked out. I think I can compare it to lumber. Do they have lumber prices here? Maybe what is the sign for lumber? LBS. LBS. That's not it. Random length lumber lumber futures. Yeah, okay. All right, but which one? Random length lumber futures. That just sounds so weird. Yeah, I don't really understand how this thing works. Continuous current contract. Maybe that one, right? So lumber dropped like crazy. Okay, lumber dropped here. Oh, that just looks like a mess, doesn't it? So it does track lumber prices pretty closely. So as lumber prices kind of go up, you see that reflected in the stock price with a bit of a lag, right? There's a bit of a lag. Generally, as it goes up, you see the stock price follow suit. And as it goes down, it plummets with it. That's good to know. That's good to know. Again, we already have this here, right? We know that the price of sawmill lumber is going to impact the industry significantly. All right, cool. So that's BCC. That gives you an idea of what kind of figures we're looking at. So roughly 1.2 times book and 6 times beta. 10 plus times earnings. Okay. What's this Russia thing? Commercial vehicles and related services. What? What's this got anything to do with this, man? Like, why is it showing up as a peer? Fortress transportation. Transportation of goods and people. I really have no idea why this is related. If you go to BCC. Yeah, BCC. Yeah, if you look at the peer group here, you'll see the list of symbols that show up at the bottom. But what's Fortress got anything to do with this, you know? Trading companies and distributors. I don't know if they're picking this up from the actual SEC filings or if they're just making up their own peer group. Looks like they're probably making it up. All right. All right, so that's got nothing to do with it. Material handling, trucks and trailers, air compressors. No. Portable storage, electronic test equipment. Oscilloscopes. No, man. Unrelated. Suspended ceilings. Okay, kind of related. I see. So gypsum type products, steel framing. Okay. I think the price of steel is going up too. With like the resurgence in industry. Okay, so let's take a quick look. Wow, that's a lot of debt relative to revenue. Debt to equity is 2, so on the high side. Yeah, I'm not going to be investing in this. Like the credit risk is significant. Quick ratio is above 1, so it's good. Cash interest high. Interest coverage not that great. Cash ratio is a bit on the low side. So okay, like it doesn't look great, but I think it's decent. No dividends. Tangible book. Wow. Significant intangibles. $20 a share. Book per share $17. Liquidation to common is negative. Okay. All right. You better have good operating margins. Okay. Our operating margins 3%. Net income margins razor thin 1%. I don't like this. I mean, it's kind of like BCC, but worse. Yeah, that's it's kind of like BCC, but worse. So it better reflect that in their multiples, right? Nope. PE is 62 versus 13. And what else? 12 times EBITDA. 1.4 times tangible. Okay. 1.4 times tangible book. That's good. It's 2. I think it's 1.2 times tangible book. Okay, so it's kind of like BCC, but worse, but more expensive. I just don't get the point of this company existing. GMS. Nope. Doesn't matter. So it's BCC or nothing. I think BCC would have been a great investment. I should have bought. But yeah, I'll wait. You know what? I'll wait. Doesn't matter. Doesn't matter. Does not matter to me. All right, so that's BCC for you. Missed opportunity, huh? Shot up. What was it? It was 49. It went up to 50. 60. Yeah. Oh, 20%. Yeah, I mean, I don't know. Like it's only been 10 days. You never know with these things, right? You can't predict short term movements. Yeah, you can't. You can't. It's a good company though. I like the company. I like the company, but it's too expensive right now. BCC. I don't think there's anything new since the last time I saw it. Feb 14th. Yeah, nothing new. All right, cool. So that's BCC. What else we got? We got CTT. CTT. Let's check it out. I love this new thing where it automatically loads the peers here. It's just so helpful. When the peers are related, it's helpful. Consistent growing per share cash flow. What are you talking about? Management of prime timberlands located in high demand US markets. Okay. All right. So you own a bunch of land that has a lot of trees. So very exposed to the lumber industry. Okay. All right. So revenue not great. It's kind of small. Wow. Surprisingly small. Debt. Whoa. Okay. Doesn't strike me as halal at all. I mean, the minute I saw Reit, I was skeptical. I was skeptical. And then now you look at this and you can see that their debt is way higher than the revenue. Debt to equity is trending up. Not something you want to see. I mean, it's typically high for REITs anyway because they leverage debt a lot. You kind of rely on debt to fund your purchase, right? And then just make money off. I guess in this case that'd be selling the commodity. But man, like, it's just gonna get worse. The primary you need debt, like it's a material part of the business, and so I'm not comfortable from a halal perspective to dive into this. So, not even gonna bother reviewing it. CTT. What's it called? Catchmark. CTT Catchmark. Yeah, not happening. Catchmark. This is one of those non-halal ones. Yeah, we're gonna pass here. What else we got? Anyway, just look kind of real quick at the margins so that we have something to compare with. Okay, that's that is horrible looking. What about EBITDA? Okay, yeah, EBITDA is really positive, and then net income is ridiculously negative just because of the high interest expense, right? That's your operating margin. Operating margin is EBIT, right? Earnings before interest and taxes. And then you add interest and taxes and it just plummets. Okay. All right. Don't have anything to learn from this. Yeah, don't even bother bringing up the peers. What else we got? FND. FND. Floor and decor, is it? Floor and decor. FND. Yeah, let's take a look. I'd love to be able to see, yeah, maybe it's worth, I mean, they're 11 companies, so it's going to take quite a bit of time to go through them anyway, but I could use a screener as well. Hard surface flooring and related accessories, so probably some of that hard lumber, huh? Laminate, vinyl, natural stone. Okay, cool. Yeah, so you sell directly? Oh, dear Lord, the debt. But still less than revenue. That's equity is less than 2. So it used to be a lot worse, but it looks like it's recovered, at least to some extent. 1.2 billion. What am I doing? 1.2 billion in that versus 2.4 in revenue. I really need to be able to pull up interest expenses for God's sake. Like I don't want to have to look it up each time. I mean, where am I going to get this from? I have to pull it up from the SEC website. This is annoying. Just to get a feel for, okay, is this actually worthwhile? Okay, let me just, okay, so credit assessment real quick. Credit assessment, okay, I don't like that. I don't like that quick ratio. Quick ratio is half. Interest coverage, okay, that's good. That's good. Cash ratio is 0.4. Okay, you know what? It's okay. It's not so bad. It's not so bad. Let's see. So you have an annual report. Let's take a look at that. Yeah, I mean, I just want to be able to pull up the balance sheet, the income statement. All right, interest expense net. Here it is. So interest expense, wow, it actually dropped in 2020. It's 8.3, 8 point, that's it, 8.3 million? 8.3 million on 2.4 billion. That's nothing. 8.3 over 2426. Yeah, it's less than 1%. Yeah, I don't have any problem with this company from a halal perspective. Floor and decor. So no problem from a halal perspective. It's really just a question of so it's friends with CTT and BCC as well. Yeah, boy, the Cascade. So it looks pretty halal to me. I don't have a problem with that. Credit assessment. So your current ratio is 0.5, which is scary. But interest coverage. Interest coverage is pretty high. 25, and cash over interest is 36. That's nice. So that's definitely a strong redeeming factor. Let's see what we have in terms of red flags. Wait, let's first take a look at what they have. So 27 in assets, 24 tangible book. Okay. 2 in cash. All right. Liquidation to common is 6. No dividends. No dividends. Better be good then. Gross margin's 43. EBITDA is 13. Okay. Wow. Wow, this is nice. I like those net income margins. That's nice. 4% for the industry. Come on. It wasn't 4%. BCC was around 2%, 3%. So very nice. Very nice. I like those margins a lot. EPS is pretty strong. Operating cash flow, free cash flow. This is good. I don't like the asset turnover, so asset turnover is up. All right. Yeah, I don't like that asset turnover, but return on equity really strong. Return on invested capital pretty good too. So yeah, I like it. This is a strong company. Strong company. Oh dear Lord. Price to earnings 50. Okay, never mind that. EBITDA 34. Oh man, that's high. That's pretty high. I mean, I'd love to have picked it up at 25. Whoa. Okay, but no, 34. 34.9. So it's not too far off from December. Like it hasn't gone ridiculously high. 3.8 times tangible book. That's rich. 10 times 10 times book. 4 times revenue. Okay, wow. This is pricey stuff here. This is pricey stuff. Not cheap. Not cheap, you know what I'm talking about. Floor and decor. Why is this showing up here too? Why is this FND? Oh, what's going on? What's going on, guys? Y1? Why is this showing up in here? Oh, what? That's weird. This looks like some sort of bug. So if you have 20, so I have 20 and then TTM kind of gets messed up, huh? I actually don't know how that happened. How did this get messed up? Did I, like, something to do with the column? Oh dear. Yeah, I'm not sure what's going on. I think I messed it up. Just do a refresh. If that doesn't work, I'll restart the computer. Oh dear, what's going on? Yeah, let's reload. Copy of main conflict. Oh dear. Yeah. It's when you get too smart for your own good. You start automating a bunch of stuff, and then it just goes crazy. All right, let me get rid of this guy. Actually, you know what? It's probably quicker to hit the script editor. Why is my internet so bad? All right, so we're looking at this guy here. Actually triggers. So what I'm gonna do is delete the ticker sheets to run that. Should get rid of all of these copies. All right, cool. And then I don't know why this is here. This is not right. Should be here, right? I don't know if the whole column kind of moved. Like, well, what happened here? Wait, let me try. Let me try putting someone else. Gelled. Okay, you know what? Let me get with this. Let me get with this, and then move on. Let's just finish up this review. I don't want to mess it up. So 94. Yeah, it's expensive. Like, it is expensive. That is not cheap. So okay. Price of lumber. Man, like that is so jittery. Price of lumber is just all over the place. All right, so you can see F&D is kind of lagging BCC. It's actually not bad. Like I would probably get into F&D. Let's look at F&D on its own. I mean, like we said, right? Asset turnover is the only put off, but other than that, looks pretty strong. Yeah, I should have got in, man. Like 85, went up to 94. I should have exposure to this sector. Just trying to find a good entry point. Really rallied in Feb, huh? What's the story here? I think we might have a good opportunity. Pulling my buy rating on floor and decor. Price for perfection. That was back in September, huh? Back in September 2020. That was right here. Price for perfection at 73. What would you say at 94? My man Josh Arnold. No, it was Value Zen. Value Zen. Hold your nose and buy. I love the titles on some of these articles. This was in December 14th. So December 14th, right around here, he said sell 94. Yeah, I'm not gonna buy at this level. Earnings just up a little bit. 20%. I don't know, you know. I'm kind of feeling like, okay, maybe there's an opportunity if you get in at 84. Looks like a decent. I mean, I haven't looked into it. But looks pretty decent. There are no comments either, so it's just pricey. It's pricey like crazy, man. Look at the price to earnings. It's 50. There's no way that's sustainable. No, I just don't see it. Yeah, too expensive. So current RSI, it's not even on an RSI basis. It's expensive on an absolute basis. It's not a relative basis. So I'd say, yeah, I don't know. Like I'd be just making up numbers here, but if you were to bring it back to an acceptable PE ratio of 33, then you would take earnings. What were earnings? Take the 1.87 times 33. That would be your earnings. That would be the price, 60, which is just ridiculous, right? F&D is just ridiculous at this point. Anyway, I'm gonna set up the hour alert for say 68, and then and then just see what happens. But I'm pretty sure we're not gonna see that trigger anytime soon, right? Last time it hit 68 was, make it 70. That was in November. 70. All right. Cool. Yeah. So yeah, that's FND. There's gelled 2. Okay, this is just a mess. Like, what is going on? Let me pull up gelled. What's it like? I'm just trying to figure out how this happened. Like, how did this gelled? Why am I looking at? This is messed up, man. I think need to, because right now I have a trigger. Again, this is completely unrelated to what we're doing, and so I apologize, but we've got a named range called ticker, and that named range is on named range. Yeah, I don't know what I'm doing. Anyway, like the version history. I want to go back to what it was, way back. Maybe this morning. Yeah, maybe this morning. Let's just go back to this morning before I made a bunch of changes to it, because it looks like it just messed up with a lot of things. Restore this version. Yeah. 10 a.m. version. Cool. All right, so let's just wait till that loads. So next up, we want to look at, so FND, nice company, too expensive, way too expensive. No way I'm going to be buying that. And I don't think I'm going to get a trigger anytime soon. And so let's take a look at gelled. Oh, potlatch, we heard about that, didn't we? PCH. Oh, but it was a Reit, I believe. Let's take a look. Okay. Yeah. A lot of debt relative to revenue. Still, it's 0.8. Really? 0.8? Reit? Yeah. This would be comparable to, I think it was CTT? CTT, Catchmark. Okay. Let's see. So, yeah, I can pull up the interest expense to get an idea for. No, not PTC, PCH. Potlatch, Deltic. Right. Let's take a look at the income statement. Where's the interest? Effect of pension. What are you talking about? Net income, tax expense. All right, so you can see net income, net of tax expense. Come on. Okay, looks like I'm gonna actually have to see the filing itself. Okay, interest expense, net interest expense was 29 what, million? 29 million over revenues of 1041. Not bad. It's almost 3%. Not great, but also not horrible, Not terrible. Not ridiculous. Okay, okay. Let's keep going. Let's keep going. What's it look like on a credit worthiness perspective? Quick ratio is 2.5. Cash ratio is 1.8. Pretty solid. Nothing to worry about from a credit perspective. Okay, all right. Set up a page. Let's see. PCH. Potlatch Deltic. Oh, what a weird name. Yeah, industry review. And so it's friends with CGT. Looks to me low risk of bankruptcy. So let's see. All right, what do you got? Oh, dividends, nice. Yeah, I think REITs are required. Like, there's a legal mandate that they distribute. I think it was at least 70% of income. But there's a tax consideration as well, which I need to think about. Like, what's the tax consideration of investing in a REIT as a foreign investor? I'm not entirely sure. I think dividends are taxed at 30%. Do they consider distributions as dividends? Yeah, they probably do. So you're going to be taxed as 30%. Plus, there's a question of like ECI, right? Effectively connected income. I don't know. I don't want to bore you with all these details. I don't even know what I'm talking about. So I'm going to look into that. But exposure, so that's just a note to me, is consider U.S. tax exposure resulting from investing in REIT. Okay. So red flags, what do we have? So first off, tangible book 35. Okay, book per share is 19, cash per share, liquidation to comment. Pretty good. And the dividend looks strong. Return on invested capital is pretty crap. All right, but anyway, let's not get ahead of ourselves. 34% in gross margin. Okay. Pretty high, but it declined the 2 years prior. EBITDA is at 30%. Wow. Operating margin, wow. Net income, strong. I like that net income margin. But yeah, leveraged companies tend to have higher net income margins, right? Yeah, it looks like, it averages out to about maybe 10%. Earnings per share, 2.4. Wow. Operating cash flow has been positive for a while. I like this. They had a dip in operating cash flow. Well, actually, you had a dip in revenue, actually boomed. These 2 years, margin got hit pretty hard. Your operating margin and gross margin. But your revenue had actually increased ridiculously. Number of shares, too. They issued a bunch of shares, and they did buybacks in 2020. As that turnover went over like crazy, and then it's back. So, yeah, I don't see anything horrible about it, actually. Looks decent. Timberland. Yeah. So, tangible book is 35. Cash per share is 3. It's throwing off $1.16 dividends. Special dividend. That would have been nice, huh? $5. Wow. $1.60. It's 60. What's beta per share? It's $4. Yeah, historically, probably closer to 3 if you're averaging out. It's $3. So I don't know. 10 times beta would be 30. Dividend is worth 16. And tangible book is 35. Is it above tangible book? 35? 35 plus another 15, 50 or so? $50? 53, 54 almost now. Wow. If you have revenue, 4 times revenue. That's rich. That is rich. 2 times tangible book, 1.5 times, no, 1.5 times tangible book, 13 times EBITDA. 22 times earnings. So if you're looking at it from a historical perspective, it looks decent. It doesn't look over like super priced, historically speaking. I mean, look at those numbers. Okay, EV over revenue, sure, pretty high. But everything else, like price to earnings, price to tangible book, I don't know how you assess REITs. Like, I don't know. Assess health of REIT. I think might have actually written on this. Avoid REITs like the plague. 90% of a REIT's profits must be distributed. Mortgage REITs are not halal. I assume there's an equity REIT. Oh, ho, 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 ho. Okay, it doesn't say, but I assume it's an equity REIT, and they don't own mortgages. The value of REIT is to value the property it owns. Book value per share is the theoretical value of the assets the REIT owns. Book value per share. So its price to book is kind of like the indicator. REITs are dividend-paying stocks that focus on real estate. NAV attempts to replace book value with a better estimate. Okay. All right. I mean, you're not really saying a whole lot here. How do I assess REITs? Book value per share. I mean, I can see book value per share, tangible book value per share, right? It's 1.5 times tangible book value per share. What does it mean? It's above one, it's expensive. Below one, cheap. I mean, you can compare it to CTT, the one I passed on because it was way too leveraged. Let's compare them and see. PCH versus CTT. So you can see for CTT, wow, it's actually trading at less than tangible book value. 4 times book, but only 0.8 times tangible book. Huh. That's interesting. Again, same thing, right? I mean, they're focused on Timberland, headquartered in Atlanta, and owns 1.5 million acres. Wow. Here's a few others too. Let's see. Also a REIT. Okay. What do you see here? 0.4 times tangible book. Why is that more expensive? Like, just from a pure tangible book perspective, assuming that's the metric that matters, right? Price to book is 1.1, but net income margin, what's net income margin look like? Oh, it's negative. Okay. Maybe find one that doesn't have negative net income margin as a something to compare to. FPI. Also negative. I mean, at least it was negative the past couple of years. Core. All right, so this is focused on energy, not really timber anymore. All right, this looks good. What? Processing centers for what? Secure facilities. Oh, healthcare. REIT. So REIT healthcare. I don't know why they have this as a comp, as a peer. REIT hotel and motels. What? Okay. But again, you can see like it trades around tangible book. Like you see the better ones, the ones that don't actually have. So this one has. Okay, this has positive net income, and yet it's trading at a fraction of tangible book. It's kind of crazy, right? Probably leveraged to its eyeballs. Oh, dear Lord, yeah. That's probably why, because there's a significant bankruptcy risk, I suppose. Liquidation to common is negative. Okay, not touching that, that's for sure. All right, so coming back to PCH. Not entirely sure how to feel about this. I mean, red flags, very few. I don't see a big problem with it, but it is pricey. Why? at least in terms of valuing 20 times earnings, 1.5 times tangible book. 20 times earnings, is that a lot for a REIT? I don't know. I mean, it seems okay. Like for a business, it seems decent. I don't see a problem with it. PCH. Let's take a look. And also, let's see if we have anything on the story. I really want to find a stock in the lumber space that I can just buy outright without waiting forever, right? That's what I want. Solid lumber company for the housing boom. That was in Feb. Okay, let's compare that to LVS. All right, so seems to follow the general trend. Okay. All right, I'll get rid of that. So PCH trading at so roughly, it's a bit high, relatively speaking. From an RSI perspective, trend seems solid. Let's say 5 years. Okay. It's just been a boom since March. Went from 22 to 22 to 53. Wow. But I'm not complaining. I was in Tesla at the time. That worked out a lot better. But this is nice. So it looks solid. I mean, there's a strong trend there. I don't know if it's going to persist or not. But yeah, I think you just get in at the right moment and you hope for the best. Inshallah, it works out. I'm thinking probably around 52 would be a good spot to come in. 52. But again, like I don't know how I'm pricing. Let me just set up the alert here. 52. I don't know how I'm pricing these real estate plays, you know? The REIT. Protection against inflation. Timberland, wood products, and land sales operations. New housing starts. Yeah. Oh, okay. So it looks like there's still a strong opportunity for growth when you look at new housing starts, because again, like this is a core input to the industry, right? New housing starts. So yeah, it's a good thing he brought that up. Lumber prices, continuous contract EOD. There's a demand story, right? Okay. That was in Feb. Like since he published this, it's been up. Like it went up from 47 to 53. I also like to look at price of sales to see for any extreme values there. Okay. Less levered company, providing less risk, having any solvency issues, market cap, asset heavy. You know what? I'm just looking for something, right? I just want to find something to tell me this is a good time to buy. Why is everybody at the company selling? Oh dear me, look at that. Like everybody from the janitor up to the VP to the CEO is just selling stock. It's not a big sign of confidence. It's not a huge vote of confidence when the CEO is just selling like crazy. I mean, look at the guy. 16. He sold twice. He couldn't get his shares out fast enough. 270K and then another 350K. I don't know, man. Like, yeah, you can be bullish all you want, but how do you value a REIT? I don't know if it's like if you want to put that much emphasis on the legal structure, or maybe just look at it in terms of a business, but it's really a play on the price of lumber and where that could head. So you're just kind of getting exposure to the lumber industry. And I don't mind opening a position even at this price, but I'm not excited. I'm already looking at highs. This is 2018 high, right? But it's compared to the price of lumber at the time. Yeah, I don't know what to make of this. I really have no, I don't know, I don't know what to say about it. It's a REIT. I don't have experience with REITs, but from a company perspective, it does look like it's reasonably valued. 22, 22 PE, historically pretty good, pretty strong. I don't like the tangible book value being so price to tangible book value being so high, but 4 times revenue too, that's pretty high. But that's where we're at. Yeah, set up the price alert. We'll see what happens. What else we got? There's RYN. Let me see some of these peers. RYN. Hey, I'm not getting the automatic peer loading thing going on. Still, what's the deal? That didn't disappear, did it? Timberland Real Estate Investment Trust. This is the same thing. This is exactly the same as what we were saying about PCH. So target price was what? 52. Yeah, current RSI is around 60. All right. All right, so we're back. We're getting some of those peers. Great. So 1.3 over. No, man. Too leveraged. I can't touch this. 1.3 billion in debt. No, not only is it increasing debt, it's also issuing more shares. Like diluting shareholders is ridiculous. Why are you doing this? It's so badly managed. What's the net income? 4%. 13% average. Nope. Nope, not touching this. It doesn't even have, like, compared to CCH or PCH, right? PCH was way better. I mean, net income is just all over the place, but looks pretty solid. Dividends, it's a buck. Buck on 33. It's a good yield. Return on invested capital is crap. Plus, I don't see interest expense, but I'm pretty sure it's going to be significant. Like a significant part of their revenue is going to be interest expense or of their expenses. So yeah, not touching this. QTS, again, same story. Look at that debt. Compare that to the revenue. It's just ridiculous. Debt to equity is 1.6. What is this? Data center? Data center solutions? What does this got anything to do with lumber? The NSA? Self-storage. Okay. Now we're venturing way too far from the lumber industry. Maybe this wasn't such a great idea. Maybe I need to find another source of finding peers. I mean, I have this website set up here, the street, RYN. That kind of gives you some, but again, you're seeing some storage companies, Realty. It did pick up PCH though. Let's see PCH on, oh, there it is, PCH. Reit, yeah. So it is a pair. I guess it's okay. When I get that alert, if I get that alert, then I'll consider. I'll kind of dig into PCH one last time just to get an idea for, okay, how do you assess the health of a REIT? Let me just quickly read this. Traditional metrics such as EPS and PE ratio not reliable. Okay, that's good to know. Better metric is funds from operations. Operating cash flow, okay. I think funds from operations is the same as operating cash flow. No, apparently not. Funds from operation. Yeah, yeah. I think it is. I think it is. So anyway, what you need to do is you need to compare funds from operation with growth rate. That's what it's saying right here, right? Dividend history and debt ratio. Okay. All right, I'll look into it when the time comes. So this is mainly a note for PCH. Assessing. Okay. Cool. So I think that's the majority of them. Seen PCH, RIN, Trex. Trex, have we seen Trex? It's not on here. Okay, I'll take a look at Trex and WY. Let's see those. And then we'll wrap up. I mean, that would have been, wow, we're just at the 1 hour 20 mark. Okay, distributes plastic, wood and plastic composite products. Okay. 8 to 80, 29. This is what I like to see. You know, very little debt. Not a problem at all. So no debt concern whatsoever. It's just 29 mil. Revenue of 800 million. Cash ratio. Cash is more than enough to cover all of their short-term needs. Okay. So assets, $6. 6 is tangible. 5 is the book ratio. Book per share. Liquidation to common at 4. Okay. Let's take a look at gross margin 40 trending down from 43 in 2017 and 18. 29% EBITDA margin. That's nice. Operating margin 27% and 20% net income. Wow, this looks too good to be true. This really does look too good to be true. No dividends, I assume. Yeah, they're just holding on to cash. Okay. Wow. Look at that return on invested capital. This is ridiculous. Okay, this really does look too good to be true. What is going on? Return on equity is phenomenal. I bet the multiples are phenomenal too. There you have it. 63. Really? 63. 63 times earnings. 16 times tangible book. Wow. This is worse than a tech company. What am I looking at? 40 times EBITDA. Man, this is expensive. Like, how? I just don't understand how anyone could buy this stock right now. There's got to be a ridiculous story. A top deck stock with matching valuation. No kidding. 63 times earnings. Wow. Yeah, I just wanted to drop. Like this company needs a proper drop so that you can scoop it up. I'm not gonna pick it up at this price. It's ridiculous. This is mad. This is just mad. Like, wow, okay, in November that would have been nice. November, 67. Okay, that's decent. I mean, even in December, it was at, whoa, it already hit 83 in December. Okay, yeah, it was here. Like, I'm not gonna even consider it at this price. This is ridiculous. This is ridiculous. Like, yeah, I mean, I don't know what to compare it to. Okay, we have a list of comparables here. Let's see if we see anything even remotely related. Security and protection. What? Water heaters? Home repair? Builder. You gotta be the one. Okay. Okay. This looks more decent. And look at that PE. It's 17. It's decent, you know? It makes sense. 10 times EBITDA. That's what I'm talking about. 10 times EBITDA. What am I doing here? Like looking at 40 times and 60 times the earnings. Not gonna happen. It's just way too expensive. Way too expensive. Like I don't even know where to start with this. Like I need the stock to just drop to like 60 to even start 67. I'm just gonna set it up at 67. God knows it might not be alive when that triggers, but that's what I'm looking at. I just don't see me buying it anywhere near the valuation it's at. Okay. All right, so that's Trex for you. And then you have UFP and WY. So I'll just quickly do these and wrap it up. I'm getting tired. My back's really strained. I don't know how you do this. Like, I probably need a chair with a bit of back support. What happened here? Not found. Come on in. UFP. Nothing. All right. Nothing it is. And then, oh, UFPI. What am I doing? Yeah, I think I might have actually reviewed UFPI. Nope. All right, so let's see. Wood and alternative products. Okay, that's related to the industry. That's good to know. 2020 revenue 5 bill, 390 in debt. Okay, debt to equity is 0.6. Nice. Low debt to equity. That's what you want to see. Quick ratio is 2. Cash ratio is 0.9. Interest coverage. Okay, looks pretty strong. Like from a UFPI. What is it called? UFP Industries. Okay, that's very descriptive. All right, and so from a Helena's perspective, looks pretty good. Strong, nothing to worry about. Red flags. Let's see what we got. All right, what do we got? 0.5 in dividends, 39, 33. Intangibles, a bit high. Cash per share is 7. Okay, that's nice. Let's look at the operations. Gross margin 16, up 8. EBITDA per share is strong. Net income, wow, nice. 5% net income. Apparently, that's better than the 3% industry average. And earnings per share, $4. This is nice. This is nice. Pretty good. I mean, don't know what caused this drop right here. There's a bit of a trend. It's trending down here despite revenue going up. So this is a bit of a concern. Maybe it's an acquisition because their goodwill is pretty high. Ah, goodwill went up here. So they acquired something. They acquired something that might not have been as accretive as, or maybe just took a bit of time before it pumped up that gross margin. Maybe that acquisition did go well after all. All right, cool. So net cash flow is positive. It was negative for a while. I guess they were. What are they doing? What are they doing? Why was it negative here? Either buying back shares or giving out dividends. Okay, they were giving out dividends consistently. Looks like it's been going up consistently as well. That's nice. That is nice. Okay. All right, cool. So, question that we're all interested in. Okay, before that, question that we're all interested in. The return on equity is pretty strong. ROIC is solid too. I like this. I like this company. I like it. It looks like it's doing a good job. This is a good job. This is a good company doing a good job. Bet they're a bunch of lumberjacks going to work, coming back after a long day at work and relaxing. I don't know why that has anything to do with this subject. Okay, so price. Let's take a look. PE All right, it's 18. It's a bit on the high side, but you know what? You know what? The industry's doing well. So suck it up. You got to pay for it. Okay. 10 times EBITDA. Bit on the high side, but again, this is something I can deal with. I can handle 10 times EBITDA, not 40 like that crap I was looking at with Trex just a minute ago. Price to tangible book is 2 times. Okay, that's a bit of a stretch. Like historically, it's never hit 2 times. This is pretty crazy. 2 times tangible book. Yeah, I don't know. I don't know. 2 times tangible book. This is a stretch. Mm-hmm. Yeah. Yeah. Oh. Okay, and then 3 times book, 0.8 times revenue. So it's still less than revenue. So I guess there's something there. There's something there. Maybe look at it. Look at it. TV, UFPI. Let me see. Let me take a look. Let me take a look. I like this company. I like none. No red flags. Story's pretty sick too. Whoa. Hey, that explains it, huh? If you looked at this just a week ago, oh my lord, they were doing ridiculously well. 61 all the way up to 71 in what, over the freaking weekend. Wow. Wow. No, I missed this. This is really good. This is so good. Yeah, I mean, the RSI is through the friggin' roof. I'm not touching this bag. Yeah, that was a miss. Like, man, when you find a good opportunity, you just need to jump on it. I just wish I did this exercise last week. Could have plowed a ton of money into this bad boy. And sure, it's trending up, but that's good. Like, home building's up, right? Home building's up. 61. That's, you want to get in maybe at 64. I don't know. Yeah, PI 64. Missed that, huh? Now it's 70. I would have gotten at 64. This is a great company. You don't need a turnaround. It's EFPI. Should have jumped all over this, man. Oh well, I didn't see it. What am I gonna do? Like they're billions of no coverage. No coverage. Okay. All right. You know what? No coverage. Don't know. There's no coverage. What am I gonna say? UFPI. What is this page? You know, sometimes Rome does this crap where it just randomly goes through. Yeah, here we are. Cool. So that's UFPI. Definitely should have bought that, but I didn't see it. You know, what am I gonna do? Yeah, everybody's selling like crazy. That's what's happening. Everybody's selling. 1.3 mil. Nice work. Nice work. And he bought it. Okay, whatever. Whatever. That was a good company. I'm not writing it off. I'm not saying a company is just going to disappear into thin air. Like, I'm saying it was a good opportunity that passed. And I'll make sure, you know, inshallah, God willing, this doesn't happen again. But man, that was good. Okay, stop saying that. What else we got? Last stock in the bunch, it's WY. Do we have that in here? Nope. This rock looks funny. Renewable energy. Air conditioner. Man, these piers, like they okay, wood. Sells wood and concrete building construction products. Okay, so it's not just wood, but wood and concrete. PE 25. Trading at 14 times EBITDA. You know, I think, kind of looking at this, it still looks kind of cheap, you know? I know the price is ridiculous, but look at that. I mean, from a fundamentals perspective, it's not that bad. And sure, the dividend's 0.5 on 71. The yield is ridiculous. It's less than 1%, but it's a strong business. It's a strong business. Maybe open up a position and just kind of see where it goes from there. Okay, like forget that last run up that we missed, and just look at it from daily. Okay, now look at it weekly. Wait, do we have weekly? Okay, it's not looking any better. It's at all-time high, but maybe it's justified. I don't know. Like you'd expect. I don't know what to tell you, man. Like, yeah, it's risky. It's risky business. It's risky business. Yep. No, not touching that. Not touching that. Okay. All right, cool. So WY. Let's pick up that last one. Come on in. Come on in. Let's pick it up and call it a day. It's an hour and a half. Okay. So 7 billion, 5 billion in debt. Wow. It's a lot of debt. What is this, a REIT? It is a REIT. Again, Timberland, right? Timberlands began operations in 1900. Wow. 1900. There's not a single person alive on this planet that's as old as this company. That's equity is 0.9 despite 5 billion in debt, 5.4 billion in debt. I mean, it's trending down though, right? So that's a good sign. I mean, it was 13 billion back in '02. Now it's 5.4. It looks like they're on the right track, right? They're bringing down their debt. Green is good. That's equity is 0.9. They're increasing equity and dropping debt. Equity multiplier is half. Quick ratio is 1. Cash to interest, interest coverage. Okay, looks pretty good. Looks pretty. Yeah, it looks pretty good. Let me do a review here. What is it called? WY. Yeah, I'm not gonna put the name in there. It's too long. Industry review. Here's looks probably need to look up the SEC filings just to see if the interest expense is what I think it's gonna be. I don't want to get into a position. So interest expense. Yeah, get to the point. Why is it green? Our net interest expense for the last 2 years was 443 million in 2020. So 443 on 7532 of revenue. So about 5% of revenue goes to interest, 5.8%. Higher than I like, but I wouldn't say it's material. What is the, so it's 7.5. Okay, so about 5% of liabilities as well. Total liabilities. Current expenses, 950. So about half of their current expenses is on interest. Yeah. I don't know, man. Don't feel comfortable. Don't feel comfortable. This is gonna be a pass. It's gonna be a pass for me. It's too high, man. It's too high. Like I feel like interest is still a bit too high. It's still a bit too high. I just don't see it. Nope. Not touching this. Not touching this. Sorry. All right, cool. So that's pretty much it. We've reviewed all of the countries, building products, wood. We reviewed all of the companies in the industry on Zacks. Hope you found that useful. We got a couple of these guys that we added to our list. Some treks we're never gonna hit, but some others that were pretty good, like Tho, Pat, Lauren, Decor. Yeah, there's a couple of really good ones that I'd like to open a position in, given the chance. So I hope you found that useful. Thanks a lot for tuning in, and I'll see you in the next video. Adios, people.